Trump's energy stocks will help you retire early. This is not financial advice, but there is one stock that looks very appealing right now. The ticker is DY, DICOM. They're a contractor for energy, oil and gas infrastructure, as well as building out data centers. And that telecom infrastructure and data center build out segment of their revenue is the most appealing to investors. That's going to be a growing vertical. It is a growing vertical. And they've got a backlog of more than $5-6 billion. So this company is holding up even as the market sells off the last few days. NVIDIA earnings were solid. The market said, you know what? That's not enough. And it sold off. NVIDIA itself sold off. And until we see, not even good news bring the market up, because we're not seeing good news bring the market up, but until we see bad news happen and the market still go up, then we'll really be more comfortable entering new investments. That's the market environment. I'm just being real with you. It's choppy. So with that backdrop, it's important to look at companies that recently had earnings. DY just had earnings a few days ago. And it's holding incredibly well, unlike NVIDIA, which just had earnings and sold off. So there's a lot of relative strength in the gas sector as well, oil and gas. It's not as strong as it was a few days ago, a week ago, but money has to flow somewhere, and it's either gone into pharmaceuticals, biotech, oil and gas, and a little bit of gold, and a little bit of home builders recently. So some people just sell, especially retail, right? And you just have your money in cash. And obviously that's not going to work as a long-term strategy, but I understand the sentiment. But for those that are sticking in the market, you want to look at where the strength is, because eventually when the market turns, the stocks that are holding up now are going to go up even more. So that's the ticker DY. This is not financial advice, but let's take a look at what's going on here.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Okay, so here's the contract revenues, $1.5 billion for the quarter, up 14% year over year. And the earnings per share is also up 35%. We can look at the actual reaction, which, as I keep saying, sure, it's great that the earnings per share beat. We can look at if the revenue beat consensus expectations. We can look at if they raise guidance. But you know what? You can look at all that and then still have a sell-off like NVIDIA had, a profit taking, a sell the news, whatever you want to call it. The market is not equivalent to the fundamentals of a company. It is over the long term, but people who got fundamentally great results over the long term, if we're being honest, there's a little bit of luck involved there, because there's so much whipsawing in the short term that, if you have a small amount of money, what are you just going to put it all in one company? That's crazy. So anyway, here's the earnings reaction, and it's holding really well. And we can see SPY the last few days not holding well, right? Following NVIDIA. And we can look at that however you want to look at it. NASDAQ, SPX, or, futures, E-mini. IWM has an interesting gain today, or the Russell, however you want to look at small caps. But in general, besides gold, which does still look interesting, everything else is looking, the dollar, DXY, crude, it's like in general, the story is not great unless you're in, very specific sectors. So I'll just name them right now. So this is natural gas. Biotech is doing great. Pharmaceuticals, Excel, the healthcare, doing great. Energy kind of sold off. Utilities kind of holding, I think, ish. Financials sold off a bit and then are doing fine just in the last few days. So individual stocks still seems like the move. I mean, if you want to take risk on biotechs, another way to look at biotechs is LABU. You can, but there's always trial data risk. So I think, if you're not an expert, I think stocks like DY are stocks to buy. And we can look into details of DY, what they're all about, but suffice to say, this is the idea right now. Earnings come out, you risk a certain level, and if it goes above that level, you're doing great. And this is kind of the story of, maybe you devil's in the details, but I know it's painful looking at someone else's charts, but let's say, we're making this video at the end of the day on May 23rd, right here. You risk this level, which is the close of the earnings day, or even, the close the following day, whatever. I don't know if this was in the morning or the after hours or what, and then you just, hold above that level, and you can see that level was whatever it was, 225. It never hit 225, so you get a good move. Now, Q3, that's not been happening as much. Some recent examples, I've been talking about Microsoft a lot, but immediate sell-off. Some of them, have been performing okay and then selling off. IBM, an example, like a big rebound and then coming down. So Guardian Health holding up as an example that did work. So this is what we're aiming for. So that's the level, and then it just holds that. I mean, a little wick, but you get the idea. So that's the idea. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in the YouTube post section once a month. And if you want to take advantage of our $19 Black Friday Discord membership, head over to stockscommunity.com. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.